Before we dive in, a quick note. If you want weekly tools to grow and lead your business, sign up for my free newsletter at stevepreda.com/newsletter. Good day, dear listeners. Steve Preda here with the Management Blueprint Podcast. And my guest today is Tomas Milar, the founder and CEO of Eqvista, a leading equity management and private market valuation platform serving 25,000 plus companies. Tom, welcome to the show.
So thank you so much for having me. Thank you.
Well, you've got a very interesting background and business. And we talked before the show that both of us are from Europe and studied in different countries and, come from a financial background. So it's kind of very interesting. Out of the 350 plus guests, I've never had someone who had such a similar background.
Interesting. Thank you. Yes. I took any opportunity, to study anywhere. One semester I would study actually three different universities at the same time. So yes, I would take exams left and right in different universities, and it would be April in Finland, May in Turkey, late June it will be back to Czech Republic. So in 1 week I would really do like this circle. The crazy times.
I heard about the professors teaching at multiple universities, but students actually multiple universities, maybe two at the same time in the same country.
But I had three.
You did three in different countries. That's completely crazy. But I guess if you wanted to fast track your career to get to Silicon Valley, young and start a company and already reach a modicum of success, you had to do that, right?
Or you drop out of school, right? You do zero schools. There's also but let's be serious for a bit. For me, it was not really about the education. For me, it's whether I can make it. So for me, it was more a challenge than academical level, academic achievement. Yeah, it was a fun time back then. I would have a Tuesday exam in Turkey, and then I would fly through to North. I would have to change the clothes in Prague because in Finland, I was just, 50 miles away from the polar circle. So it would be still winter. So I would take winter clothes and have an exam in Oulu, which is almost at the polar circle. Yeah. So from Istanbul to polar circle. So it was fun time back there.
So I saw it on your LinkedIn page, this place, North Botnia or something, and I couldn't imagine where this place was. So I actually Googled it. And then I saw some pictures come up and they were all ski slopes. So I figured that it's going to be a cold place.
It was very cold, yes. A lot of sauna.
Yeah, that's lovely. Let's get into the topics. And, one of my questions I always ask guests is, what is your personal why and how are you manifesting it in your business?
I learned by heart that, you never ask why, at least for me. After living in China, things just happen. It just happened. And some people don't really know that certain things are possible until they make them possible. So from impossibility to possibility, which is quite interesting always to see, things happen without rational reason. So I don't think it's really about why. I think it's really to be naive when you do things and just do it and figure out certain things along the way.
Yeah, well, the naivete, I agree with you. I believe it's a great entrepreneurial trait because it allows you to not kill good ideas.
Yes. And Steve, more you know about certain things, less likely you will do business in that certain industry, right? Like the doctors never start hospitals, right? Bankers never start banks or neobanks because they understand that it's just so damn difficult. So, the naivety, to be foolish and hungry, it really works. Yeah, that actually what works for me. So, again, I never thought about certain business ideas, why I should be doing it or what's the reason.
What energizes you about running Eqvista?
I think it comes in different phases. So right now, we are going to launch a control tender offer for you guys who don't know what it is. So when you issue stocks to employees or investors, you can get them back. We don't really like the term to buy them back, but it really explains actually what happens. So once you issue options or you issue stocks, you can actually buy back and redistribute the same stocks to different investors or shareholders So that's our new product. We have a very big challenge in front of us, and it's how to price stocks. We do over $8 billion in clients' assets valuations every month. We are one of the largest equity valuation platform on the market. And that's actually what energizes me. Not really the number, but how hard it is to become number one. And actually what drives the innovation. Because if you want to be number one at anything, you need to innovate. And what we have actually fixed is the report. When you issue stocks, you need to have a stock price. And the stock price is actually a reflection of the market, how the company is doing, different rounds. And the stock price, it's usually you find it usually in the report. It's a PDF, 40, 50 pages. And by the time you get the report, the valuation is outdated, say 4, 5, 6 months, 1 month, 2 months. In 2026, the speed of startups, 6 months, some companies grow exponentially.
Yeah, I saw your LinkedIn post on SpaceX, and there was an April 26 valuation, which was 1.6 billion, maximum trillion, I'm sorry, $1.6 trillion. And then you just came up with a new post 4 days ago, and you showed that it was over 2.6 trillion. So there was a over 40% increase in 2 months in the value of such a huge value company, the most valuable company, or maybe second most valuable company in the world. So how does that happen?
Particularly for SpaceX, there's multiple factors. There's definitely hype, no doubt about it, because 95 of the revenue, that's ridiculous, right? Multiples. For publicly traded company, we usually see 6, 7. That's the best multiple probably for, but 95, that's unheard of. How that happens, there's multiple reasons, right? Like one of them is innovation. One of them is that SpaceX is the only company actually was shooting spacecraft to the orbit, and obviously almost factor. And if you look at the space economy, whatever we are doing on Earth, we'll be doing the same stuff in the space, right? So looking at SpaceX as a shuttle between the dream in the space and then practically mirroring what we do here on Earth. I think it's a great analogy. For us, it's a really nice demonstration how any company going public should have real-time valuation. It doesn't have to be publicly available. You can choose. Again, think of how Merrill Lynch, I think it was Merrill Lynch and Bank of America helped with the roadshow and with all the due diligence and documents. I can't even understand how they modeled the valuation one time. They probably did have done that like every 3 days, but if they were having real-time valuation, they could clearly understand what's happening on the market. So, going back to your original question, what excites me? This is exciting because we built the largest valuation model on the market. Currently, we value without SpaceX because the SpaceX would take a half of the benchmark, but we do over $4 trillion constant valuation as of now.
Okay, so let's then talk about this, because in my time, in my investment banking firm, we had a valuation practice and we offered 6 different types of valuations. But really, we just wanted to have like an enchilada process where we would have EVA valuations and multiples and private and public and DCF and all that stuff. But I'm really wondering, because when you are valuing small private companies, then you've got all this liquidity discount and the marketability discount and ownership discount, all these discounts. So it kind of boggles my mind how you guys can value all these startups, which may not have even revenue and they're very early. So because this podcast is on frameworks, I'd like you to share with me, with the listeners, a framework that simplifies this whole valuation. What are the major elements? If you had to constrain yourself to 5 major elements of your valuation, what is it?
Yeah, so definitely I can help with that. So obviously is the industry, right? Is the industry. So we have models and data set we have acquired over the years. So we have a $400 billion in clients' assets valued manually. Okay, manually, even before AI, we were using AI, right? So we really tested the models. We really were working on what works and what doesn't. So that's one element. So it's the data set. Obviously, public comps, we have, again, incredible models to choose and pick the right companies, right? There's 4,000 publicly traded companies on the market. Very important set. Then we have a data directly from clients, also very, very important. So the data actually reflects the reality of the company. Obviously you can do the estimate, but all these estimates, there are platforms out there and they will give you a range. There's actually a company now that they try to copy us, but they came with such an unfortunate solution. They had a range and see the range, what's the range? So let's say you have $100 million company valuation. So they came with a range and it's functional model. It's a very, very known company. You know the company. And the range was $30 to $100 million. The range, the valuation range.
200? Okay, great.
30 to 100, 30 to 100. I'm like, that's not even though a range. It's ridiculous. So, again, you can try to copy it, but it's not going to work. We have to have a analyst. So we have a in-house close to 20 people, valuation analysts, double master degrees, CVAs, CFAs, level 3, and HCVA certified. So we can also issue certified reports, so we can support the audit defensibility. So in the case when any company is undergoing M&A, we can help with additional questions from Big Fours, so McKinsey or PrivateCo, when they challenge the valuation, we can defend the stock price. It doesn't really happen when we issue the stocks, but it happens down the road.
Yeah, that's fantastic. So let me ask you this: what drives growth in Eqvista?
So what drives growth in Eqvista, a product, is really simple as that product and our company economics. We don't really waste time and energy on things which don't work. We focus on heavily what really works and on really what only works. So we haven't raised much money, right? So we bootstrapped the company, we raised $500,000. I always gave up on the fundraising because I'm product founder. I don't really do many roadshows or meetings. I hate meetings, actually. I stay with my team. I'm product centric, super focused on a product. And I think that's one of the reasons why we are successful. So I was always fortunate to build amazing products and hire very talented people who can just get what we have built and sell it. So it's the product. So I was always manifesting the pull marketing rather than push. Obviously, the outbound or the outreach is also extremely important. But the pull marketing, it's way to start, especially in the United States when you want to go to, let's say $5 or $2 million or $1 million in revenue. Because sales, direct sales, it's extremely, it's hard.
So what's one thing that you're trying to actively figure out in your business?
It's the price, it's the stock price, how to effectively value the companies. That's what excites me, and that's what we try to figure out on a practically daily basis. So we have a team of specialists focusing on the stock pricing discovery. The adoption would be extremely important. How we will succeed in how will we successful in distributing the stock price to different segments of the market.
I'm trying to understand this. So you already have 25,000 plus companies that you value. You are able to defend these valuations, in court or in M&A situations. So what do you mean exactly by trying to figure out how to effectively value companies? I mean, it sounds like you have figured it out. So to what degree do you have not figured it out?
We have it, right? But it's just it's for us is about the efficiency, right? Efficiency and how precise we can really price the stock price. That's probably for public market big question, right? Some companies are underpriced. How's it possible that a company with strong balance sheets has a lower value than cash in the accounts? So this kind of things. There's definitely a different approach to value company with $200,000 and a company with $300 million revenue and $22 billion post-money valuation. These are crazy formulas and approaches, right? So that's one, referring to. We still have to work on the precision, because on that scale, on that level, the companies are extremely sensitive to any type of deviation. Even though 1% means $100 million. So that's very important. And actually very important for even those startups to realize that, on the lower level, we have a startups, they might be deviated by a few hundred or few $1 million. That's also a number we should be really considering as a founder, CEOs, CFOs. So that's why the real-time valuation is extremely important for all of us. We are just trying to teach the market about the real-time valuation. So
yeah, I can imagine. Even listed companies that have public data and just the market sentiment, something happens in Iran, the stock can drip 10% day by day. What could happen in a private company, and then you don't have real-time data available? It's going to be a really thorny issue.
It is.
So if you had a magic wand, Tom, and you could fix one thing in your company in the next 12 months, what would that be?
The adoption, the real-time adoption, how we teach the market about real-time valuation. So that would be the thing I would love to fix. We have actually a few ideas how to do it. We're actually becoming clients ourselves. So we are actually launching a controlled tender offer, so secondary marketplace practically. Down the road, we need to apply for ATS, alternative trading system. But that's 8, 9, 10 months from now. But at least that's our vision, and that's actually where we would like to be headed.
Mm-hmm. So you are going to do like a listing or like a reverse IPO or something like that?
Not really reverse IPO, no. Just to help shareholders to liquidate the stocks on the market. So it'll be practically a platform where you can liquidate the stocks as an employee or investor. So that's for us something we'd like to focus on. We issue stocks, manage them, we price them, and we'd like to also help with their liquidity.
Wow. These are very exciting challenges.
Yes.
A lot of people tried to overcome this. So if you will, definitely going to be pioneers in this area. Perhaps AI can help with that.
Perfect. Yeah, I have a list of people who I know how to use them and when. So invite, always welcome.
All right. So if people would like to learn more and contact you, where can they find you, or where can they find your Eqvista? How can they connect with you and learn more?
Yeah, so I can definitely help with multiple subjects: company formation, bootstrapping a company, any product-related questions, and obviously equity management, stock pricing discovery, efficiency, and and most importantly, anything about Eqvista. So you can find us at eqvista.com, eqvista.com. The same for the email. It's Tom, TON at eqvista.com.
Okay, awesome. And you can check Tom out on LinkedIn as well as Tomas Milar. I think you're listed with your longer first name, and he posts regularly articles and very exciting ones, especially the one I saw, the most recent one on SpaceX and how the valuation shoots up like a rocket. So definitely check it out. And if you enjoyed this conversation, make sure you subscribe, you follow us on YouTube, you give us a review on Apple Podcast, and stay tuned, because once or twice a week, we come with exciting entrepreneurs like Tom, who shares their frameworks with you. So thanks for coming, Tom, and sharing your insights, and thanks for listening. That's it for this episode. Keep moving your business forward. Subscribe at stevebreda.com/newsletter.